Friends, in this release, we'll discuss on the compliance requirements under section 206C(1)(h) of Income Tax Act, that is TCS, on sale of goods applicable from 1st October 2020. In the earlier two releases, we have discussed the implementational issues, so one can look at the other videos on TCS posted in our channel and understand the other issues. In this release, we will restrict to primarily the compliance requirements of TCS on sale of goods. So, in brief, the provision 206C(1)(h) requires that in case a seller of goods receives a consideration of more than 50 lakh rupees from a particular buyer in a previous year, then the seller has to collect TCS at the rate of 0.075% from 1st October 2020. However, in case TCS under 206C(1) on scrap, on motorcycles under 206C(1)(f) for other provisions like 206C(1)(g), or the buyer deducts TDS under any provision, then TCS under the instant section would not be applicable. This TCS would not be applicable on export of goods. If the buyer does not provide its PAN card to the seller, then this TCS would be applicable at 5% under section 206. This TCS would not even be applicable on imports or when goods are sold to government. It would not be applicable to those enterprises where the turnover in the previous year is less than 10 crore. Turnover means gross receipts, turnover or sales, anything. If it is less than 10 crores in the previous year, this would not be applicable in the current year. So, one needs to see the consideration received from a particular buyer from 1st October. Whatever be the consideration received till 30th September, that is not to be considered. However, from 1st October, the consideration received, that has to be considered, and whenever this consideration received per buyer is more than 50 lakhs, then this TCS would be applicable, right? So friends, as you know, 7th November 2020 is the date when the first payment under 206C(1)(h) needs to be made. Mind that in case there is a delay in making payment under this section, or you do not pay till 7th of November for TCS collected in the month of October, then there would be an interest of 1%. So, we have made a checklist of 10 points which one should remember while complying with this TCS norms. First of all, one must see that one has not collected more than 50 lakhs from a particular buyer, and then only one should take a decision that this TCS would not be applicable on that buyer. Many a times industry, we have seen, makes a mistake. They just see the turnover or the sales made to the particular buyer. However, it may be that you have received money in advance from a buyer. So what needs to be considered is the consideration received. and not merely the sales in a particular year. So one must be careful. If one does not collect TCS on sale of goods from a particular buyer, one must see the receipts from the particular buyer in a particular year. Second is that even if you have made the sales prior to 30th of September 2020, however, if the payment is received post 1st October, then if the consideration total from 1st April exceeds 50 lakh, TCS needs to be collected on that consideration received also. Therefore, in the instant case, if earlier TCS was not disclosed to the seller or the receipt does not include the TCS, then it is advisable to raise debit notes, that is commercial debit notes. Generally under GST, we advise that debit notes would not be commercial debit notes. But in the instant case, since there would be no GST on TCS, therefore commercial debit notes would be recommended in case sales is made earlier and payment is received post 1st October. It is always advisable to have a ledger, a separate ledger of TCS due from a customer. So for example, you are making a bill on a particular customer for say 1 lakh plus 18,000 GST. Immediately it is advisable to post the TCS receivable from that customer also in a particular ledger. I am not using the word charge. Mind that this TCS is not a charge. Many a times, many taxpayers do this error that they show it as a charge on the invoice and then filing GST returns is a problem. Please note that this is just a collection of tax under income tax and it is not a charge. Therefore, it should be just disclosed on the invoice and not be charged. You might disclose it as a separate line item, which we have recommended earlier also. Well, thereafter in that ledger, one must do a reconciliation between the TCS which was disclosed in the invoices to a buyer and the TCS collected and what is paid to the government. One must be careful that the vendor master has the right PAN number. Otherwise, it would lead to a mismatch. You would be saying that we have deposited the TCS, however, the customer will not receive it as a credit in Form 26AS and there would be a reconciliation issue. So, regular reconciliation should be done between your books and the books of the customer. What the customer has shown in his books as TCS paid and what you have shown as TCS received and what you have deposited and filed the returns. So this is a regular reconciliation which would be required every month or every quarter, I would say, so that at the end of the year there is not a mammoth reconciliation which is left pending. It would just be as good as a reconciliation which you do for GST, reconciling between your purchase register and your GSTR 2A. In this case, you have to reconcile your receipts vis-a-vis Form 26AS, which or the TCS return which you file for the particular buyer, right? Friends, very important is that goods under Sale of Goods Act, which is applicable under 206C1H, also includes securities. However, White Circular 17, the CBDT has exempted the securities traded which are listed in the stock exchange. However, private sale of securities or shares would come under the purview of 206C1H also. Electricity is also goods and that would also come under 206C1H. Capital goods, sale of scrap is also good. So if 206C1 is not applicable, it would be liable under 206C1H. Therefore, it is mandatory that you do a reconciliation of all your receipts in a particular month so that you do not miss out on collecting TCS on any receipt on sale of goods, right? Similarly, one must do a regular reconciliation with the vendors also. That is, what amount you have paid them as TCS and what amount they have deposited and which is reflecting in your Form 26AS. Every quarter, that is first return will go on 15th of January 2020 for the quarter Q3 2020-21, right? So from October to December quarter, the first return would go in Form 27EQ and a declaration would go under 27A by 15th of January 2020. The payment has to be made on 7th of the next one in Form 281, that is Challan 281. Most important is that certificates under 27D needs to be issued within 15 days of filing of the returns. So there are 5 compliances, major compliances under this 206C1H. First is payment on 7th of the next month. The next is reconciliation of your Form 26AS vis-a-vis payment made to vendors. Third is reconciliation of your TDS returns, that is payment you have made to the government on behalf of your customers with the ledgers of your customers. Next is filing the quarterly returns, and last is issuing the certificates within 15 days of filing of the returns. So all of these compliances would be a regular feature, and taking into account the gamut of the transactions and the number of line items which would take place, it is very important that taxpayers do a regular compliance every month so that at the end of the month it does not become a major unreconciled issue which becomes very critical. Thank you very much. Do keep on viewing the other videos on this channel, and every week you would find a new video on the recent issues and developments in taxation. Thank you.